I'm going to stick with this just to see if it triggers for no other reason. Actually, I'm going to go back. I'm going to go to the SPY just to see what's going on in the market there. All right. All right, look at that topping tail, pulling back. Let's see if we get back down to 280. If you remember, I wrote on today's blog, I'm expecting some profit taking today. So we punched through 280, which is the level that we're watching for the reasons we just mentioned. Looking for profit taking Thursday and Friday. So again, that's another important reason of why I said to have trades on both sides of the market. If the market pulls back, we don't want to be shorting strong stocks. We want to have a list of stocks that are already weak to look for a short sale. Got some really good lessons here right out of the gate. So we had AVGO. And I'm going to pull this up on the daily chart. So you can see why it's on my short sale list. Gap down, holding. And we got a couple of days where it's closing above the open. That's fine. But same thing, but the opposite side. It's not trading below today's open. It's not even trading below yesterday's close. So we're not even looking for an entry here. We're not doing anything. The only thing we would possibly look for is if the hourly chart starts to turn down, we get an inside candle, and we look for a test of today's low. So I can't express enough. These two trade examples, one long and one short, are worth $10,000 in the next month just by understanding what trades to stay away from. And if you do choose to get into a trade that's not perfect, how to manage it differently. That is gold that we just covered in the last 10 minutes. Below 280. You see why we mapped that out before the market? So what's going to be interesting now is buy stops from yesterday who bought the breakout will probably be triggering just below 280. So people bought the breakout at 280, bought yesterday. This is the level that should have held. Again, remember we talked pre-market. I want you to have guts to say, what do you expect to have happen today? When that unfolds perfectly, you trade with conviction. When you have the guts to say, I expect this to happen, and it doesn't, then you're like, okay, what I expected isn't happening. I'm just going to sit back and wait for it to do exactly what I want it to do before I risk my capital. And that's what we're looking at right now in the SPY. Good stuff here, Jerry. You know what's exciting? This is 20 minutes of lessons, and really nothing has happened yet.
Yeah. I'm looking at MTG.
Exactly. So again, right out of the class, we got a couple of things going on right now. We actually got a bottoming tail. We have if you remember, we have a swing low here,
Yes.
which would indicate a short-term reversal of momentum. But something bigger is at play here is we're still below 280. So even though we got a bottoming tail, which is also a bullish U-turn, which is also a swing low, we have major resistance right now. Because don't forget, this resistance is from the daily chart. This is a monster triple top on the daily chart, and we punched through it. So even though this technically would be an entry or a momentum trigger to be long if we were trading the SPY right now, I still wouldn't do anything until it got above 280.
Okay. Yeah.
You have to put those, again, you have to put those pieces together. The car in front of me is driving fast. The car next to me is, you got to put all those, not just the car in front of you. What's the guy in the lane next to me doing? Yeah. You know, it's funny. I've been teaching this since 2000, and driving a car to me, even after all of that time, is still the best way to visualize this because it's not just one thing. You're not just looking at the hood of your car saying, do I got to go straight? So this is actually really cool here because I'll make sure it's on the video. We have a bullish U-turn for this candle because it traded below this candle, reversed, closed higher. We also have a bottoming tail, and we also have a swing low. So this is a pretty powerful reversal signal here, looking to the upside. Now, let's put a couple of things in perspective here. If we were trading the SPY, we would absolutely be looking for this to be our first entry long, but it would not be an aggressive long because we're below today's open, which I'll draw that in here as well. So there's today's open. There's the minimum criteria for us to be looking for us to be aggressively long. Again, that's today's open because it's the first 5-minute candle. But this would be our initial entry. So let's just keep calling initial entry. Let's say 30% in this case. So 30% of whatever shares we want to get. That would be the first entry. Stop loss would be down here. We'd be looking for it to get above 280. Today's open would be the first target where we'd expect it to pause if we do get another push higher. So there's really awesome entry and exit signals here. In this case, we're using it as a good illustration for looking to bid a small piece of the order that we'd want to get in the SPY. Built the scenario around why 280 matters, but 3 different signals here. Bullish U-turn, bottoming tail, swing low, entry signal, significant level, opening price would be the first target. So even if we get long here, which we're not doing until we crack 280, it's only on a portion. So if we get long here and it fails, we're only doing it with 1/3 of our share size. So you got to think in your head, every single trade I'm looking to put on, I want to get a head start if it's a less than perfect trade. If it's a perfect trade, if this same stuff was happening up here, and especially if it was up here above yesterday's high, it would be much, much better to have more conviction because of the criteria for monitoring order flow. We are forcing it to say, I want to see yesterday's buying is back. And unless I see it perfectly on that chart, I can take a trade, but my conviction is going to be lower until the perfect trade is in front of me. So we can work in order until it becomes perfect because we got the signal and because we want to be long on the daily chart, but it's going to be with a lower conviction level. Now, how unbelievably awesome is this that we call this 280 as a level that we want to see it penetrate, even though this was a signal. Do you see how you start to put those pieces together?
Yeah.
God, you're getting so many good lessons. Now, the point that I also want to get across here, we happen to be looking at intraday charts. All of this can be done on daily, weekly, and monthly charts too for swing trades. What's cool about doing this on intraday charts is that we're accelerating the amount of opportunities that we could look at to pull out. Look at this and why. Look at this and why. Look at this and why. That's what makes the intraday charts kind of fun. But these same exact thought processes and criteria, this could easily be 3 daily charts and a 4th daily chart and a 5th one, a 6th one looking to enter a swing long that this was long on a monthly chart. So I want to get that across. You would manage your swing trades the same way. We're getting an accelerated lesson here because it's the shorter term time frames.
Yeah.